Welcome back to Primary Source China Investment. Peng.guo and I are here with show M2. This week, we're going to talk about zero COVID and China's turn inward, because that's been happening and COVID has accelerated that process. So if we just look at arrivals into Beijing airport, it's going to be a while before Beijing does 51,000 flights a month, as it did in the summer of 2019. In November of 2021, it did just under 30,000. So zero COVID contains multitudes. And this is not about a debate about how to manage the pandemic. It's about the derivative effects of such management. Foreigners are leaving. A combination of tighter rules, taxation, and local competition has left the expat community 40% smaller in Beijing than a decade ago. As I said, this has been happening. Total foreigners in Beijing is 63,000 in a city of 20 million. That means foreigners are scarce. And China's benefited the most, arguably the most, from globalization. And that seems to have stopped or at least been put on pause. So how does this all translate into an investment strategy? Simple. Invest in Chinese companies that serve the Chinese. This is the answer that Ray Dalio should have given Andrew Ross Sorkin. Instead, Ray flopped on the ground like an Italian midfielder. If you have a philosophical objection to investing in China or investing in a company that does business in China, like Nike, because they manufacture or sell, would you have the same objection to a company like Aokang or Anta or Li Ning? It's difficult to care more about Chinese workers when you're sitting in New York, San Francisco, or London than it is for the Chinese themselves. Feel free to fire off the comments at us about our 10-company stock portfolio, because that actually does the worst, as we covered in last week. So I know we've jumped into this very deeply, and the waters are murky, but I'd like to get your thoughts about all of this, Peng.guo, and take it from any angle you wish.
Sure. I think COVID-19, obviously, my parents, I, and most of the Chinese people experienced the whole cycle since the end of the 2019. So even I'm pretty much the first person get the sensitive about the COVID-19, because they get the similar, China have similar issues before. So I think at the starting point is really no any government or people, including my parents, have sense about this kind of the virus. And my parents had so difficult to convince them to wear the mask. So it's pretty much
your parents early on were not.
Yeah. And even they wear the mask, they choose the cheapest one, just to put them on. And so from that, I see how difficult to change people's habit with that. As we know, China government have pretty strong enforcement ability. Obviously, it's also triggered the human rights topic with that. And I think overall, it looks like still control the spread of the virus among the city and the different community. They pretty much do their best to test and screen and people for that.
Yeah,
I think overall they get controlled, and the people, they do really benefit for that. My parents, while they work out, they still not, most of the time, they still not wear the mask.
They can get a ticket. Yeah. They may get a ticket.
But some, I think right now they are not a requirement required to the outside. But my goal is to try to convince them wear the mask for the indoor. But from the high level, it's really impacted the entire investment world. So you will see like the digital economy and online related business get really boomed. So people right now, they are not forced face-to-face talk. That is the most popular way and the mandatory way to do business in China. You keep flying to the different city. It definitely is low efficient and pretty pain process to do it. Right now is people change to the online meeting and make decisions online. So I think that's a huge change to the business as well as the investment world. And also, I totally agree with you. I think investment world, they realize investment companies service locally, but China is already proposed like the rely on the domestic consumption.
Yeah.
It's a pretty much the same concept, but different term to do it. And the overall international trade or the profit, so their percentage in the GDP is keep decreased over the time. And also, due to the COVID-19, and the whole world, the supply chain get screw up.
Yeah.
So that's always generate like the huge profit in a certain area and huge loss in a different area.
Yeah.
I think it's really difficult or challenging to all business. Even you make a huge profit right now, probably over the night, you may lose such a big profit. So it's hard for everyone, I think.
Yeah. And a lot of firms are moving things around as well. They're looking for secondary places to make things. I mean, even if you go to fast fashion stores here in New York and you look at the labels of where things are made, all sorts of places are now becoming manufacturing spots. And
yeah, each uncertainty is really the risk.
Yeah.
So all the business, they keep the supply chain they running is just to handle the normal situation. So due COVID-19, the need get rushed to the peak, which is cause the mass, and then drop down quickly. I think nobody can handle such kind of the mass.
Yeah, yeah. So I wanted to turn this back to a little bit about the investability. So for our watchers who are sitting in the US, some may wake up and say, you know, China's just not going to fit into our investment guidelines, similar to what maybe tobacco or alcohol or even, you know, energy might be to other investors. That's becoming easier as I believe stocks will trade in China and will continue to migrate out of US exchanges. So if you do want to invest in China, then it's going to be easy to do that. You're going to pick an ETF or you're going to pick some stocks that trade on Shanghai, Shenzhen, or maybe even Hong Kong market. On the demand side, the market is big as well. Remember, market cap in Shanghai and Shenzhen is about 8 trillion US dollar equivalent. Mainland investors trying to invest abroad, the reverse, have to go through this awkward QD channel. And that's a very narrow pipe. Remember, QDII, for Chinese investors that want to invest outside, the pipe is only $154 billion. And that's only 2% of the market cap of Shanghai and Shenzhen. Now, if Tesla or Apple could list in China, what would happen? We may never find out, but just remember the experiments of the Baidu's, Jingdong's, Pinduoduo's, and Neos. When those stocks list back in China, I submit that they're going to get a very strong bid.
If a Tesla or Apple or such kind of company listed in China, definitely that is a hot topic and the top priority for many asset management companies.
Yeah.
Generally speaking, Chinese people and they understand the value. They know all the good companies. So they know who manipulated the accounting rule or whatever the bad things in the market. But right now, the bigger conflict is really China treated like the accounting data as well as the auditing data related to the national security. So that is a different, totally different topic with the investment world. And on the same way, we understand that like the A-share, they used to get a lot of the accounting fraud, and everybody hated that. And right now, China regulations is also take the much higher punishment for those people. Now we know this previous punishment really like a joke, but right now it's pretty serious.
Well, look if you have fraud in the U.S. Look at the guys from Luckin Coffee. That was a complete fraud. What happened to them? Nothing.
Yeah, that's definitely needed to get improved. I think anything fraud in the market just get a huge punishment. Right now, investment bank, accounting firm, auditor, and independent board member, that all could be related to the fraud. If they get a fraud, they have to pay by themselves. The new case is already show that. So hopefully, the new rule can solve such kind of a problem, make people get a peace of mind.
Yeah, I think my point was you get in less trouble in the U.S. for fraud than you do in China. You know, if you committed the fraud that you committed with Luckin in China, you would definitely be in jail. There's no question about that. I think the relisting, the delisting that's going on right now. Look at Didi just announced this week that they're going to go list in Hong Kong. I don't think there's any fraud related to that or any malfeasance, but it is this migration that's happening. And there was something on CSRC that said, oh, you know, there are going to be no more IPOs outside. The VIE structure is dead. And, you know, CSRC had to come out and say, no, that's a rumor. But practically speaking, I believe that VIE structure is all but dead.
I think, generally speaking, all the company's value depends on the business and the operations. And the political could get the short impact to the firm. Obviously, like the China, United States, they both have a lot of the political risk for the company. But right now, I think people may not have time to think about why Didi delist in the U.S. market. They think about what kind of the China investment banker firm could get benefit for such kind of a migration. You will see the China Asia securities ETF, they get up. So that really means in the next 3 years, all those companies go back to Hong Kong. Those companies, investment bankers and brokerage firm, they get huge benefit.
It will be a feast for investment bankers. That's true.
That's a big business for them. People have no time to think about why you get delisted. Let's move to which one could be profitable for the next sector.
Yeah, absolutely. I think that's absolutely, it's in place and happening as we speak, and we'll continue to do that. Those are the kind of things that investors should be looking for. And again, we submit, if you're going to buy China stocks, there's no reason to buy all of these stocks that are listed in the US. There are plenty of great firms. There's plenty of great stories on the mainland, and you have access to that now through some ETFs or through Hong Kong, Stock Connect. There's plenty of ways to access that if you just do a little bit of homework. And with that, we're gonna leave it here. Thanks for tuning in this week. We appreciate all your support and look forward to talking to you soon.
Thank you.